in terms of dealer ranges. Very straightforward ideas, right? So in terms of historical volatility, in terms of dealer ranges, can we all agree that that seems to be the dealer range there? We go from a high price to a low price. Now, it's just an observation, but it's obviously the big dealer range. We've gone from the Asia overnight sessions high to the Asia overnight session low into the London session. So we take in a lot of time in that trade there, a lot of time. So based on that range, do we agree that there is a confluence that's visible on that range just there? Do you see that? You see how tidy that confluence is just there? So when that range goes bid, and it goes bid with a very aggressive buyer, the dealer's not going to offer this price. The dealer's pulled, right? The dealer has absolutely pulled at that point. And we now know that there's a very high probability that 74.95 is going to be the dealer's offer now. And if the dealer offer goes bid here, then of course, where does the buy actually come from? Well, at this stage, we can already recognize where the buy comes from, right? So I can go into that price area there, and I can start looking at that price area around about this area here. And I can start looking at that and saying, right, well, that price is going to jam around about 74.40s, right? And because this is the US session, I'm expecting it to extend out from this area, right? So if I now go from that as a narrative, from this breakout point here to that point there, I know that this 50 is going to aggregate the price. Now I'm doubling out the volatility, Mike. That's what I'm doing, doubling out the volatility for the US session. So if I'm doubling out the volatility for the US session and I see buyers coming into these areas here, where is the dealer short coming in? If they bought this price, which they obviously did, where's the dealer short going to come in? Well, the dealer short's going to come in this area here, right? So I'm thinking about 80. So I always take it down a little bit because I don't want to expect it to always go full size. So I take it to the nearest wholesale and I just pop in a dealer offer there at 75.80s. And all of a sudden, I've now got my ideas. I've got the aggregation at 50. I've got my target price now set up here at 80. And I'm now looking at that volatility expansion phase as a possible short sell, because obviously what's going to happen from 4 o'clock, the market's going to die, right? So we might never get to this price. So this might become the dealer's offer here. And we'll obviously look to then rotate that price back down to the bid down here at 70. So that's going to be the dealer offer. That's going to be the dealer bid. And we'll probably run that range there from now on if we don't get up to this price here by 4 o'clock, right? So if we don't see 80 printing by 4 o'clock today, I think that 75, 50, 60 area is going to be the dealer offer, which means the dealer bid's going to come back in about 74.70s.